History is one of the best teachers we're ever going to find. So here we are in 2023, and we've got a banking crisis once again. Totally different than '08, absolutely different. So what's really going on here? And what's my opinion on the SVB banking crisis and the Fed bailing them out and everything else that's going on? Well, let's be real clear. First off, capitalism works in my opinion. And what should have happened, in my opinion, is we should have let the bank fail and then let it be sold off to somebody else. A bigger bank would have stepped in and bought them. They have plenty of assets and they would have bought them. So what does this really mean? There's so many people so concerned about the money they have in their local bank, their credit union, or their big bank, Bank of America, Wells Fargo, wherever it might be. So as I record this today, it sounds like there's a couple of others real close. We had to suspend trading, it sounds like, on Credit Suisse. So there's the next one that may fail. And then here in the United States, there's a couple that are being looked at real hard. You've got Goldman Sachs and Truist. And those are the ones that are being looked at the hardest. It's kind of funny, Goldman Sachs is trying to make the claim that they're not near as bad as Truist, so they don't want to be even in that mix. But the bottom line is, there is some issues. So what's really happening here? Well, think about it this way. The steep Fed rate hikes that have been going on trying to manage inflation, so we can agree or disagree, but we've been raising rates at a rapid rate. So think about it like this. Let's say a bank had $1 billion a couple of years ago and they wanted to invest the money. They might have put it in a long-term bond, maybe a treasury. And let's say in this example that $1 billion got them a 2% return if they held it to maturity. So what maturity means is, let's say it was a 10-year bond in this example, hypothetical, and you held that until the 10 years is up. Well, think about it. What happens? Well, then you were guaranteed to earn a 2% return on your investment every year for the 10 years that you held it. Well, you could actually put that on your books as $1 billion of assets. And there's no risk here, and everything is great. Well, here's where the problem comes in. Interest rates have gone out of control high with what? Inflation. Inflation got out of control, Fed raised rates. So now you could take that same $1 billion in an example and get a much higher bond, one that pays a much higher interest rate today. So now all of a sudden, let's say we all got together on Reddit or Snappergram or one of these other channels and we started talking about, I think SVB might be in danger. And we all went and started removing money from the bank. That's called a run on the bank. Well, guess what happens? The bank was actually operating, except for all of a sudden now they need more cash to give back to the people that had money on deposit. They're taking money out of the bank. Well, at some point they're like, oh, we're going to have to start selling some assets. So one of the assets they might sell in this example that I'm giving would have been that $1 billion bond. Well, here's the thing. It's worth $1 billion and at 2% interest rate. But who wants to buy a bond that pays a 2% rate when you can get one today paying a much higher rate? So the only way to sell that bond was to sell it at what's called a discount. You couldn't get your $1 billion back. You could only get back $600 million or something like that. So it's a big loss. So at this point, what happened was they would have had tremendous losses to meet the liquidity challenge they were faced with. Well, here's the scary thing. This is every bank in America. Why? Because they all invested in bonds. 2022 was the worst bond market on record. Now think about this. They started tracking bonds and markets and things. Bonds have been around a lot longer than 1976, but that's when they actually started tracking it. So you have to go all the way back. 1976, there's never been a bond market worse than last year. It completely collapsed. At one point, 10-year treasuries, 20-year treasuries were down over 30%. Safe government treasuries down over 30%. This rising and raising of the rates by the Fed has caused an absolute disaster when it comes to people that have had long-term bond holdings. This is why the markets are so panicked right now. So what does it mean? Is your money safe? What's going to really happen here? Well, this is where I said we should have let SVB fail and let another bank come in and buy it. But at the end of the day, I believe our money is safe. There's some winners and losers in everything. We saw that back in '08. We're going to see it again in '23. One of the winners looks like it might be Bank of America. According to something I read this morning, they've received an influx of cash like they've never seen before. Why? Because people are pulling money out of smaller banks and moving them to bigger banks. I don't recommend that. I think we have to make good policy decisions at the federal level, and that will filter down. Unfortunately, that's not happening. There's going to be some reckoning that has to be done. So where does all this really end? Personally, I'm not panicked about the banks. I think it's going to be just fine. I really do. I'm a hopeful guy. I'm a glass half full kind of guy. I think we have to make good decisions with our money. I still have cash in my bank. I still have cash at multiple banks. Should you have well over the limit of the FDIC insurance? Well, this is where it gets muddled, because we've kind of set a trend today with SVB and insuring them, or not, we didn't insure them, we just said we would make them good above the $250,000 FDIC limit. Here's where that gets really weird. What if Bank of America failed? They're not going to, but what if they did? FDIC cannot make everybody whole. There's not enough money to do that. That's where it gets scary. So I would encourage people to make sure you know who you're investing with, make sure you know who you're banking with. Do not sit around and worry all day and all night about your dollars at your local bank. Have a credit union, have a big box bank that you work with. Keep your accounts, your savings accounts. It's going to be okay. I believe that in my heart. This is not done yet. We're going to see some more. Listen, when bad policy exists, when banks aren't run correctly, the things that really need to be looked at is where's the accountability on the local FDIC? You have the federal, but you also have regional directors that should have been overseeing SVB, that bank, Silicon Valley Bank. They should have been overseeing them and saying, hey, you're in a danger zone here. Fix this right now. We've got to hold these banks accountable for our money. And it's not my job as a taxpayer or your job as a taxpayer to always run in, step in, and bail them out. They need to be held accountable. I know what happens in my working career when I used to be an employee. If I didn't do my job, I got fired. We've got to hold these companies responsible, and if they don't manage their books correctly, they get fired, they get put out of business, they get bought by other banks. That's what needs to happen, and we need to get back to doing it the right way every day. We got to think about Main Street, not Wall Street always, and not always allowing, oh, we're too big to fail. We have to learn from history and not repeat these mistakes. But at the end of the day, I still believe in America, and I still believe our money is going to be safe in our banks.